Thank you for joining us for the 1530 First Street Southwest MDXL Flats Project, Subcontractor Contracting, and Employment Training. Here you will find the contact information for Gilbane Building Company, the general contractor, and Atmos Solutions, the contracting and employment compliance officer for this project. These are pertinent individuals who you may find need to contact at some point during the life of this project. And we'll give you a brief moment so that you can screen capture or write down this information. We will now go over the Department of Small and Local Business Development and their requirements. DSLBD is an oversight agency that monitors private and public projects per DC official code. It requires that all construction and non-construction government assisted projects with contract values of $250,000 or more meet a 35% small business enterprise participation requirement. Now, what does this mean for subcontractors? It means that if you have contracting opportunities during the life of the project, that you must make all attempts to contract and outreach to SBE and CBE companies. You will also be required to submit a SBE subcontracting plan listing all your subcontractors, especially SBE and CBE subcontractors. Here you'll find a sample of the SBE subcontracting plan's first page. This will be pre-filled before sending to you, so you will not have to worry about completing this page. Here you'll find a sample of the second page of the SBE subcontracting plan. This is where you will fill out the information concerning your lower tier subcontractors, including their name, address, what tier they are in relation to you, what work they'll be completing, and the amount of their subcontract. Now there are only two sections on this page, so you would need to duplicate this page if you have more than two lower tier subcontractors. Here you'll find an example of the last page of the SBE subcontracting plan. You will not need to complete this page, as this is to be completed by the Department of Small and Local Business Development. In regards to your lower tier SBE and CBE subcontractors, you will need to submit a fully executed subcontract or purchase order for each lower tier. DSLBD uses this document to verify that they are indeed obligated to perform work for you for the amount that was stated. In addition to this document, they will need to submit a quarterly vendor verification form, and this is at all tier levels. Here we've provided an example of the first page of the vendor verification form. Again, this document is a document that is provided quarterly. It attests to the monies that a SBE, CBE subcontractor has received in a quarter that has just ended, and it is then submitted to the Department of Small and Local Business Development. Now here you'll find the first page. The first page details the project information in part 1, the company's information in part 2, and in part 3 it details how that company plans to complete its scope of work on the project, whether it be for the entirety of the project, for the entirety of a subcontract, or whether that company plans to subcontract out work to other companies. Here you'll find the second page of the vendor verification form. This is probably the most important part of the document, as it attests to the money that has been received, and it has the notarization and signature section. In part 4, you will be detailing what you received in the quarter that has ended. And I'm going to go through this line item by line item so that you are filling this out correctly. In the first section, you're detailing the total amount of your contract or subcontract. In the second section, you're detailing what was subcontracted to lower tier SBE, CBE subcontractors, if you have any. In the third section, you're detailing what was paid in the quarter that was just ended. In the fourth section, you're detailing what you were paid to date. And in the final section, you're detailing what is left to be paid to your company. DSLBD imposes a very specific SPE requirement for all firms participating in this project. There are certain outreach efforts that should be conducted in a timely manner in order to maximize the participation of SPE and CVE subcontractors. Below, we have included a list of some of the activities that can be conducted. However, if you're conducting an outreach activity and you're not certain if it will suffice to satisfy DSLBD's requirements, please reach out to your project manager or your compliance manager and they will be more than happy to assist you. We're now going to switch over to the employment requirements, which are overseen by the Department of Employment Services. So who is the Department of Employment Services, or DOES? DOES is a DC government agency that monitors and implements the First Source Employment Agreement Act of 1984 and the 51% District Residents New Hires Amendment Act of 2001. DOES is also your first source in recruiting for new jobs that are created by government-assisted projects. So what is the first source requirements and who does it apply to? First source law applies to all beneficiaries and their lower tier subcontractors whose contracts are $300,000 or more on government assisted projects. It requires that that individual complete and submit a first source employment agreement and revised employment plan to DOES no less than 7 calendar days prior to starting on the project. So to get into the specifics of the mandated first source requirements, this law was enacted to benefit DC residents who are affected by these DC-based projects. It requires that each subcontractor who must enter into a first source employment agreement have DC residents work a specific number of hours in a specific category, and they are listed below. 20% of your journey worker hours must be worked by a DC resident. 60% of your apprenticeship hours must be worked by a DC resident. 51% of your skilled labor hours must be worked by a DC resident. 70% of your common labor hours must be worked by a DC resident. In addition to this, if you have new employment opportunities, you must list them with DOES first. This is so that they can provide you with a viable district resident candidate. And you can do this in one of two ways. You can call DOES's Job Bank services, or you can list your position with their DC Networks online portal. Again, please make sure that you follow this regulation if you are required to enter into a first source agreement, as this is a law that is regulated by DC's government, and failure to comply can result in a monetary penalty. We now want to go into a little more detail in regards to the revised employment plan, so that in the event that you have to complete one, you are a little more prepared to do so. So the revised employment plan has to include your projections in regards to how many hours are going to be worked by DC residents in those categories that we just previously discussed, as well as your hiring plan, or if you do not plan to hire, your justification sheet, which explains why you would not be hiring for the project. However, I do want to note again that if you're entering into a first source requirement, while you're not required to have employees work in all classifications, any classification that you utilize, you do have to meet that district resident hour work percentage in that category. Again, failure to meet that requirement will result in a monetary fine. We wanted to make you aware that DOES does monitor your workforce statistics through the life of the project using the certified payrolls that you enter into the LCP tracker system. We also monitor your workforce statistics through the life of the project, and we will provide you with a monthly workforce statistics report so that you are aware of where you stand in regards to meeting your first source requirements. so that you can make any adjustments necessary to ensure that you are meeting those requirements. Additionally, DOES can conduct at-will audits and they can request your payroll and employment records. In terms of penalty, for willful breach of your first source employment agreement, failure to submit any compliance reports, or falsifying or deliberately submitting incorrect information, DOES can assess a fine of up to 5% of the total direct and indirect labor costs for the project. In terms of failing to meet the first source requirements, DOES can impose a fine of 1/8 of 1% of the total direct and indirect labor costs by which you fail to meet each requirement. In addition to the first source requirements, any contractors whose contract values cumulatively total $500,000 or more within a 12-month period on DC-based projects must register and implement an apprenticeship program with the DC Apprenticeship Council. There are additional requirements associated with this apprenticeship program. You must maintain a minimum numerical ratio of 1 apprentice to every 3 journey workers. Additionally, 35% of your apprenticeship hours must be worked by DC residents. Failing to comply with either or any of these requirements will result in a 5% direct and indirect labor cost monetary fine. As an FYI, below we have included an example of the workforce statistics and how they are utilized to monitor your compliance in regards to the first source employment agreement requirements. In the chart below, you will find the subcontractors' workforce classifications that have to be met, the total number of hours, the total number of DC resident hours, the DC workforce requirement percentage, and the actual percentage that has been met. Now, this subcontractor has been deemed non-compliant. This is because they are not meeting the skilled labor and unskilled labor DC resident hours percentages. If this subcontractor were required to enter into an apprenticeship program, they would also be deemed non-compliant in the apprentice category as well. We'll now go over the Davis-Bacon Act and its requirements, which are overseen by the Department of Labor. The Davis-Bacon Act was enacted in 1931 to prevent non-local contractors from coming in and obtaining federal construction contracts by underbidding the local wages. The Davis-Bacon Act requires a few things. It requires that local prevailing wages be included in bid specifications. It requires that subcontractors who work on site of the project pay their mechanics and laborers no less than once per week. And it is also applicable to any federal government or District of Columbia project contract that exceeds $2,000. Regarding the wage determination, it requires that all tradespersons working on site of the project be paid in accordance to the wage determination's wage rate, based on their classification and group number if applicable. In terms of certified payrolls, they must be entered in consecutively numbered starting with 1. For any work week in which you do not perform work, you must submit a no work week certification, and this would fall within those consecutively numbered payrolls. All payrolls must be entered into the certified payroll system, which is LCP Tracker, until you have completed your scope of work for the project, in which you will then mark your final payroll final. Please note that all employees who are subject to the wage determination must be paid a fringe benefit rate for each hour worked if the company does not provide bona fide fringe benefits. Below, we have included an example of some of the fringe benefits that your company may provide, including paid holiday, sick leave, vacation, life insurance, retirement, any sort of additional benefit that the company is paying for that employee. This does not include payroll tax or any other deductions. In terms of the payrolls, a statement of compliance must be submitted, signed, and completed by the person who either pays the employees or the person who supervises the payment of the employees. A few additional items we want to make sure that you're aware of in regards to the Davis-Bacon Act requirements as well as certified payroll. The first being that DOL can conduct at-will audits of your payroll records at any time. Additionally, wanted to make you aware that Atmos Solutions will be conducting worker wage interviews throughout the life of the project. Also, you are required to maintain your certified payroll records for up to 3 years after the project has been completed. Now, this is not after you've completed your work on the project, but after the actual project has been completed, as DOL can conduct at-will audits of your payroll records during that time frame. We also wanted to make you aware of penalties that can be assessed by DOL for a certain number of things. The first being falsification of your payroll records. This is a criminal violation that can result in a fine or up to 5 years in prison or both. And it is also grounds for a private lawsuit under the False Claims Act. If you are found in aggravated or willful violation of the labor standards provision, or if you violate and disregard your contractor's obligation to your employees or subcontractors, you can be debarred for up to 3 years. We wanted to ensure that you were aware of how the wage determination in the District of Columbia's living wage relate. The District of Columbia increases its living wage biannually, and the District of Columbia's living wage actually supersedes the wage determination. So what does that mean? It means that if the District of Columbia's living wage is higher than the wage rate on the wage determination, it trumps the wage determination and that rate must be paid. So in the instance of the example below, you have on the wage determination that the common labor category should be paid $13. This would not be the wage rate that would be appropriate to pay. The appropriate wage rate to be paid would be $15.20 plus the fringe benefit. So instead of paying the individual who is the common laborer $15.84, you would have to pay them a rate of $18.04 minimum. We'll now go over the Department of Housing and Community Development and the Section 3 requirements. Please note that the Section 3 requirements have changed as of July 1, 2021. Section 3 of the Housing and Community Development Act of 1968 was enacted to ensure that employment and economic opportunities that were generated by projects that receive financial assistance from HCD are to the greatest extent feasible, engaging low and very low income individuals as well as recipients of government assistance for housing. Now, as I mentioned previously, on July 1 of 2021, the regulation was modified and it is what is known as the final rule. It was enacted to improve effectiveness in a couple of areas. They wanted to promote sustained employment and career development, clarify obligations to recipients, align reporting with standard business practices, and to focus on reporting on key metric outcomes so that they are ensuring that these individuals are being utilized and not just hired onto a project and then put to the side because they're no longer needed. They want to make sure that these individuals are being developed and kept on board on other projects and that they are improving and becoming better and more viable in the workforce. Here we provided a table so that you are aware of the key changes that have occurred between the old Section 3 regulation and the final rule. There have been some key changes to the benchmarks or the actual percentage requirements, the definition of a Section 3 worker, as well as the definition of a Section 3 business concern. So what are the new Section 3 requirements and who do they apply to? The new Section 3 requirements threshold is now met at a project level. This means that if a project receives HCD funding assistance in the amount of $200,000 or more, that requirement is then trickled down to all of the subcontractors performing on site of the project. It still excludes suppliers. So what are the specifics of the percentage requirements? So this has changed drastically. It is no longer a new hire percentage and it is no longer a contractual percentage. So it is now a labor hours worked percentage. So of the total labor hours, 25% must be worked by Section 3 district resident workers. 5% must be worked by targeted Section 3 district resident workers. And we'll go over what a Section 3 worker is and what a target Section 3 worker is on the next slide. A Section 3 worker is an individual who currently fits or when hired within the past 5 years fit into one of the below categories, meaning they are low or very low income worker, they were employed by a Section 3 business concern, or they are a youth build participant. Now what is a targeted Section 3 worker? A targeted Section 3 worker is a person who is employed by a Section 3 business concern, they currently fit, or they fit within the past 5 years into one of the two categories. They live within the service area or the neighborhood of the project that's within 1 mile of the project, or they were a youth build participant. What is a service area and how does it relate to targeted Section 3 workers? So a targeted Section 3 worker, again, is an individual who lives within the service area. So the immediate service area is an area within 1 mile radius of the Section 3 project. However, if less than 5,000 people live within that 1 mile radius, you can then extend the worksite circle to encompass more of the population. So more of the population would then be included in the targeted Section 3 worker category. And we've included a chart down below for your reference. Find an example of how compliance and non-compliance with the new Section 3 requirements will function. If you have worked on a project with first source requirements, with the percentage workforce hours, you are probably a little familiar with how labor hours and specifically targeted labor hours coincide to give you a percentage. So in the example below, we have two contractors, ABC Corporation and 123 Corporation. Now, ABC Corporation is deemed compliant because they have met their Section 3 worker benchmark or requirement, as well as their targeted Section 3 worker benchmark, which again is 25% and 5%. In our second example, 123 Construction is not meeting the requirement. Although they exceeded the targeted Section 3 worker benchmark, they are not compliant in the Section 3 worker benchmark. Remember, you have to be compliant in both areas, not just one. Now, when you are outreaching to and engaging with Section 3 individuals, you want to make sure that you're keeping good, thorough documentation of your qualitative efforts. These are any of the assistance or outreach efforts or training opportunities that you're providing to these individuals. And below we have included a list of some of the qualitative efforts that you can conduct in order to assist Section 3 individuals. We have now come to the end of our training. If you have any additional questions or concerns, please reach out to your compliance manager, Ms. Kalila Woodland Adams. Thank you for attending the training and you have a wonderful rest of your day.